What's going on, guys? Welcome back to your morning watch list. What we're going to do is run you through the most popular stocks on Discord this morning. So what we're going to do is really just show you all the stocks that everybody else is talking about. So whether or not these stocks turn out to be good is another story, but this is a go-to sort of game plan for me when I wake up in the morning and I'm like, there's really nothing that looks good to me. So let's just basically see what everybody else is talking about. And then let's see if any of that looks good. So what I'm going to do is just run you through, again, a quick process that I do, which is just basically tracking the most popular stocks that everybody is looking at each morning, and then just reviewing those. Now, I will tell you right now, I have not looked at any of these stocks. So as I go through these, it's going to be as if I'm going through them for the first time today. So you guys are really going to be able to see kind of from behind my shoulder how I go about analyzing stocks each day and then kind of picking what I would actually like to do based on support and resistances or significant levels we determine, okay? So we are sharing the screen. The stock is GENE. This is a penny stock. That's why it's probably the most popular. It's cheap and it's affordable, so most of the planet could probably buy it. So it's very common to see penny stocks as their most popular because more people can afford them, so naturally they just get talked about. So this is a stock, GENE. It's a technology something I don't even know. I really don't even care, all right? So what I'll tell you right now is if I'm somebody who's a day trader and I'm looking at this intraday, I would look here at this level first, 413. 413 is going to be the price that the bulls will need to hold that price above, or else long biased traders are going to stop out and they'll cause one of those candles to go bam. So the 413 price for right now is a significant level that going forward into market open, you would really hope for and want to see the stock GENE hold over in order to have some sort of hopefulness that there's going to be a bullish move in the immediate time, okay? Now, if we go to the upside, say the market does hold that level I talked about, and then it goes on a big long push. This white trend line in the middle at about a price of 460, we're just going to make it 462 because by the time market opens, it's going to be higher. So by the time market opens, if we go on a bull move, right, that 462 price or that white trend line going through the middle, that's going to be your first resistance point. And that's going to be your momentum transition point. So you'll go there, you'll hit it, you'll see a red or two red candles or three red candles or four or five or six or whatever. But if in the event the market can cross through, that's where you get that next big jump up. And then that's probably going to put you at your bigger resistance point, which is going to be here at $5.05. If in the event you can actually get through $5, which would be somewhat lucky, then it's possible you see a move up to, anyways, it's possible to see a move up to 553, okay? So those are all the intraday levels. Now, what's more important than the intraday level is the longer term level. So now what we want to do is we want to basically reverse everything we just did and go to a daily chart, or we're going to go to a 4-hour chart or some sort of longer time frame chart, which for me is typically 1 year, 365 days, or the 180-day 4-hour time frame. Okay, so now when we go look at the daily chart, what I would like to do is delete all the old drawings because those are intraday levels. And now let's go map off the significant daily chart levels. So let's say the market does in fact run up today on GENE. Well, we have a resistance mark here at 422 that might have already played out. Then we have a resistance mark here, which we're not even going to talk about that one. We'll just jump straight to the green. So we got one right here at 529. So I would go and say, it's possible we get to those levels only if all those prices that I just put on the chart exist within the intraday channel. Okay, so let's go look at the 1 minute chart again. Well, the first level here is 428. You can see we just kind of traded and flirted around that, and now we're breaking down to where? We just broke down to what? Basically 413. Remember how I said the market needs to stay above 413? We just snapped down right to 414, not quite 413. But we snap down to that trend line and we're trying to hold over it. So if the bulls are going to have a good day on this stock today, what they're most likely going to need to do is continue to hold that yellow trend all the way back up and then cross the 420 and then squeeze out to 460 and then so on. Now the upper level that we talked about on the daily chart comes in at 528. So again, you can see that the bigger time frame resistance exists at 528. Just as we said, it might be pretty lucky if you get over 506 and then you might press up to the 547. Well, before you get to 547, you're going to run into a daily chart resistance point. So I would say if in the event the market goes long, pretty much anywhere from 552 to this 505 is a good level you would be taking profit if in the fact Genie has one of those long presses. All right, ladies and gentlemen, that wasn't bad. Let's get on to the next one here. So next most popular stock that we can go over is going to be VBLT. What do you know? It's a penny stock. All right, so VBLT, it's a penny stock. That's why everyone's talking about it. It's cheap. It's affordable. That's why everyone's talking about it. And because the stock went straight up in the morning. This, ladies and gentlemen, is literally the most common thing we see new traders minds gear towards. Like, it's almost like it's crack, okay? And believe me, you really don't want to mess with that, right? So literally, it's like crack. They see these spikes that happen so fast, and they're like, oh my God, did you see how quick that went? You could have made so much money so quickly in just that little bit of move. And then they 9 times out of 10 just drop right out, right? It's kind of like doing crack, right? You smoke it, it feels all great, and then you wake up 5 years down the road and you have no fucking teeth. It's not good, okay? So for those of you tuning in today, the best advice I could give you is if in the event you see a penny stock just kind of spike right up in the morning pre-market, they're most likely going to be shitbaggers and you don't want to mess with them. So we're actually not going to go too much further in regards to VBLT. The only thing I'm really going to try to do is see if in the event this $1.60 price was a daily chart resistance, which there's a very good chance that it was, okay? So let's take a look. All right, so as we zoom out, we have that line up there. There's the $1.62 mark, which exists just slightly over our 3 standard deviation resistance point, which is 159. And if we put on the 4-hour chart, we might have another level there. Boom. And then you could even argue old price action. So yes, when you go and look at the 1-minute time frame, all of these 3 lines that I just put on the chart, or sorry, those 2 lines, those were 4-hour and daily chart resistance points. As soon as the price reached 150 to 160, we started to sell down, okay? So we hit daily chart resistance points, and now we've sold all the way down. The likelihood that this stock has a good day, probably not gonna happen. So let's continue and move forward. So there, right, like we would say, nope, we're not gonna trade VBLT. It's not even worth it. It's a shitbagger, okay? Next one on the list, hold on one second, is gonna be Tesla, okay? So we'll take a look at Tesla. So Tesla's a stock that you guys know I've been trading over the past couple days. Long story short, Tesla ran into kind of its $400 resistance that we were kind of knowing of. So really the first thing that I would do in a situation like this is I would go to the longer time frame. So I would start here maybe at a 4-hour time frame, and I would say, okay, is there any significant levels that we're on right now? And there's not. There's only a mediocre level, which is right here at 392, okay? Now let's take a look at the daily chart, because something might exist on the daily chart. When we go to the daily chart, the closest level we have for resistance on the upside is going to be 417, okay? And then the closest support we have on the downside is this mediocre support at 365, and then we have bigger support down here, bigger support down here at like 314. So what I would do is I would first pick the closest levels that we could essentially reach. So for me, actionable levels for resistance are going to exist right here at about 392, and actionable support levels are going to exist probably down here at 366. So I would say to myself that on the intraday chart, the 2 biggest longer time frame supports and resistances exist at these 2 price points. So if in the event markets move to those points, we could see a bounce, right? So we don't have to catch the whole move down to it. We can just wait till it gets there and then take action off of it, okay? So right now I would say something like this, that the markets are probably looking to do a short move down below this regression trend. If in the event markets snap below this white line, you'll have a panic move down that could take you easily as far as 364 before you get any sort of good bounce. I see that as a likely outcome, but for me, there's really nothing that I would want to trade on Tesla right now. I am still just a neutral watcher on Tesla, okay? On to the next one here is going to be AAPL. All right, so if we look at AAPL, a lot of people have been wanting to buy this as it comes down into this dip. So again, we would do the same thing. We're going to go to the 4-hour time frame and we're going to go, okay, so right now the stock looks arguably bearish. So I'm going to say that Apple's probably going to have a bearish day. So you're probably going to be more short bias. And the reason I say that is because this is the first sort of big correctional move we've seen in a while. Right now, we're not really on any support system. It doesn't appear. Our first big support might come in down here at about $100.08. Wait, that doesn't make sense. Sorry, $108, okay? And then if we go to the daily chart, we're going to say, oh, we even have a level just below the 108 level, which is going to be at 104. So for right now, on the downside, our most significant support systems are going to come in starting at 108 to 103. So are these previous little bottoms going to hold? Is this day going to hold? Is that day going to hold? Is that day going to hold? Or are we going to drop out below those lows, hit 108 and 104 and then bounce? I would be more of a trader that would like to take the bounce off 104 or 108. Okay, that's kind of how I would go about doing it. So for me right now, I would say Apple is in a position where it's currently a little bit more bearish and we're not actually on any significant longer term supports. So I still see a need and a want and a strong possibility that markets are just going to shake down a little bit more until they actually reach what many of us traders and investors would see as a better buying zone, which would start around 108 to 104. So I would say to myself, Connor, when Apple, if in the event you're right, and it does go down to 108 to 104, that's where you're going to start considering a reversal long bounce. Okay. All right. Next on the list here is going to be NKLA. And give me a second. I want to take a sip of this coffee. This is how my mornings go. I talk so much that I never actually get to drink my coffee, and then it gets cold and I got to put it in the microwave, and then it's just kind of gross after that. Perfect temperature. Very good. Good stuff. Good stuff. Coffee. All right, ladies and gentlemen, we're going to take a look at NKLA. The reason we're going to take a look at NKLA because it's a very popular, talked about stock. Everyone's talking about it, but could you imagine why everyone's talking about it? I mean, think about it. The stock just ripped up from $30 all the way to like $56, and then it just crashed from all the way from $56, basically all the way back down to the price it was just trading at. I mean, that is a whipsaw crazy move. There's a lot of emotion going on. A lot of people bought this because of the good news with the partnership with GM, and then everybody's stopping out because of the bad news, that they're fraud, that they're taking everybody's deposit money and using that to grow their company. Again, I don't really care about all that. I mean, I kind of do, but again, if we just take a step back, let's look at our longer time frame chart and see what we can come up with. What we come up with right now is the fact it looks like NKLA is literally right on support. Today, this morning, we have dipped down straight to the 4-hour level at 35.28. So essentially, NKLA is directly on support right now, and it's not very surprising if you've seen a little bounce today too. So I would say to myself that today you would want to start your day off more long bias on NKLA unless you're successfully crossing down and below 35.25 with extreme selling volume, okay? So you're not really short bias unless markets are really selling harsh through 35.25. Otherwise, you're probably more of a long bias bounce trader down here, or maybe like a scalp bounce trader. Let's take a look at the daily chart. What do we got here? The daily chart actually doesn't have support down until 29.65. So this is even a situation where you might see traders try to hold the first level of 35.25. And if in the event they fail, everybody trying to buy the bottom at 35.25 is going to add the fuel to the sell-off down to 29.55 where you actually bounce. And this would be that common sort of situation where you think you have the bottom, so then you buy the bottom, and then you stop out, and then you sell, and then it hits a bottom, and then it comes back up. This is to me actually kind of looks like maybe one of those particular situations where it could occur. So right now we have a slight support we're on at 35.25 with NKLA. And then again, you have a better support system just below that at 29.55. So if you see NKLA down to 29.55 and then bouncing, it's completely normal, okay? All right, let's move on and go forward to your next one, which is KODK. Can you imagine why everyone's talking about KODK? I can, because last night I made an overnight jump, or had some jump last night that kind of looked like crack. Okay, so last night things shoot straight up. Everyone's like, oh my God, which, I mean, there's good reason to be excited about it. This isn't like the other crack stock, which was Genie, or no, it was VBLT. That was a crack one, but so yeah, this one isn't quite like that, but it's still a shitbagger. So let's go over it, I guess. So long story short, stock goes all the way up to 60, comes crashing down. When that happens, there's always a likelihood that the stock can have like a good relief bounce day. Well, it's already tried it multiple times, one day here, one day there, one day there, one day there, and then multiple days, and it keeps getting sold into. So I'm not one that puts a whole lot of faith into KODK, because we've seen it multiple times. Try to jump that day, sell off, jump that day, sell off, jump that day, hold, sell off, jump that day, sell off, jump that. So it's never been able to successfully hold any of these push days, okay? So we're probably just gonna avoid that one altogether, all right? Next one on the list, which is again very important, is going to be SPY. So part of the reason why I had mentioned that something like Tesla or Apple, actually I didn't say it on Tesla, I only said on Apple, but the reason I said something like Apple could still see a respectful sell-off is because the markets are positioned to still have a respectful sell-off. Now, what I mean by that is this, okay? If I may make the screen a little bit smaller-ish / bigger. Now, if we just measure the percent return from the low of the pandemic to the previous high of 358.75, that's a gain of 65%. So the market basically almost went up like 100% from pandemic levels, and the world isn't fully back to work. So the world that we had, the economy that we had, the money that was flowing and exchanging hands that we had before the pandemic, we don't have that now. So in reality, market price does not reflect that of the economy we just had. Now, many will argue that the economy is not the stock market, and the stock market is what we expect the future of the economy to be, and blah, 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 blah. So again, I'm not here to make that debate. But what I can tell you is the markets are at a price where we were previously at pre-pandemic, but the world around us is nowhere near where it was pre-pandemic. So again, it doesn't really actually make much sense to many. That being said, we went up 65% from the low of the pandemic drop to the most recent previous all-time high at 358.75, okay? Now, I have sent out a couple Facebook posts recently talking about a correction. Someone had commented and said, oh, more of the doomsday. That it's not even doomsday. Think about it. The market went up 65%, like immediately. A 10% pullback is classified as a correction. Well, let's use Connor's approach. Let's go see where all the nearest longer-term support levels would be at. So if we look at the 4-hour chart here, we got a couple, so let's map those off. Oh shit, there we go. Yeah, boy. So we have a trend line in the middle here that also matches up with the 100 moving average. So we have a 320 level that would be a good bounce spot. And we have a 318 level here, 316 actually, excuse me. So we have levels starting from 320 to 316. So we have a $4, I guess you could say, wiggle zone where we might dip below the 320, tag 316, stay just above 316, just below 320. But we have a zone there where I could almost just do this with my chart so that I visually know that if I just take this little box and go like that, and then I just edit properties and I would just label that one green, I would say to myself, that is a long bias trading zone, okay? So now if we go from the top of the all-time high down to those price targets I just mentioned, and let me shrink the chart so you can see the percentage gain or else it won't work that way. If we go down to that price, ready? Down to Connor's price targets for a bounce, that's gonna put you at about 12 to 10%, right? If it ends up in that green zone, on the low of that green zone, it'd be about 12%. On the high of that green zone, it'd be about 10%. And to classify a market correction, you need at least a 10% correction, 10% decrease from the high. So if we go to the most logical near-term low-risk support bounce spots that I'm able to locate, that would put the market at about a 10 to 11% decline, which therefore would be a market correction after jumping 65% from the pandemic low back to an all-time high. And the world around you is still not the same. To me, that makes complete sense. So right now, I would say something that's pretty possible we see is another decline in the market all the way down to prices of 320 to 318 before we see one of those significant bounces. And to be honest, I kind of hope it happens because I put so much effort into this goddamn video that if it doesn't happen, it does something else. And I'm going to look like a complete jackass. And I don't want that. So I kind of do want the market to go lower, hit the 320, hit the 318, and then buy it long. All right, guys. Hope you liked the video. Hope you learned something new today. We're going to end it there. I do appreciate you guys tuning in. As always, make sure to hit the notification bell so you're notified when these videos come out before market opens so you can watch them and basically know what we're trying to do. All right, guys, everybody take care. Have a great rest of your day, and I'll see you on the next one.